Hey guys, welcome back. In today's video, we are talking about Adam Aaron starting the squeeze, Citadel failing, the first fund to blow up, and many more in this video. Firstly, we're taking a look at this. AMC, if this chart is correct, the first AMC GME squeeze will be kicked off by CEO Adam by converting HYMC warrants in ahead of June 6th. The second leg of squeeze will be kicked off by Ryan Cohen buying Bitcoin at July lows of 44K. And so that's one of the things that's been thrown around recently. And it's also obviously being talked about because of everything I have covered and later on in this video, including the 2.1 trillion derivatives that Citadel owns, is about understanding when the squeeze will happen. Now, obviously, when we know that in terms of the squeeze happening, it ultimately will be started by two stocks, which is none other than AMC and GME. We understand that the synthetics that's involved with AMC and GME is obviously greater than any other stocks that are out there. Funds are trapped within AMC and GME. They've put out more capital and collaterals in AMC and GME. So ultimately what will start the squeeze will of course be these two. And it's being said that obviously the CEOs and others obviously have the power to be able to make certain decisions that could fast forward the squeeze. Now, we obviously talked about Adam Aaron. Now, HYMC may be one of the methods. We obviously talked about others in the past as well. And ultimately, it is saying the fact that he does have potentially the ability to start the squeeze because we talked about the fundamentals. We talked about, in this case, HYMC. We talked about how, of course, the investigations and, of course, others, the issuance of dividends. All of these things can force, of course, shorts to cover. And the same with GME as well. We know that if Ryan Cohen and GME themselves are able to be extremely profitable in terms of the Bitcoin purchases and work out the way that MicroStrategy is doing, then we can see how GME price will go up. And once again, because of all these average short positions, when the GME price reaches certain levels, it will definitely push out and margin call a lot of short sellers. The difference between now and potentially 6, 7, 8 months ago is that right now, because of the volatile market, lots of liquidity are disappearing. Lots of firms are in extremely risky positions. One of which is, of course, Citadel. You can see Citadel's 2024 statement shows 2.159 trillion in gross derivatives. But wait, there's more. Palafox Trading LLC, Citadel's obscure inner sanctum, has 35 billion in its own notional exposure. And here's why Citadel's reported trillion in exposure is very concerning. A small loss could mean billions of dollars. Now, one thing you have to understand is Citadel was already forced to close their highly leveraged positions. Not all of them, but some of them. But the very fact that they were forced to close these positions should already tell you what sort of position they are in right now. Furthermore, we also know that they posted a loss in February and March. And so to understand that a small loss can mean millions, billions of dollars is already showcasing how much they are losing. Furthermore, if a counterparty defaults, the market crashes, or if a stock is heavily short in spikes, Citadel would have big problems. And this is what we talked about. GME or AMC, when they do something well fundamentally and it boosts up their price, the first initial increase in price isn't even the short squeeze. However, the first initial boost in price is extremely scary for the short sellers because they can't afford to have AMC or GME go up to certain prices because it will, of course, heavily margin call multiple firms, especially at times like this where they don't have the ability to be able to suppressing, these stocks. And you can also see if Citadel negotiates a lot of derivatives directly with counterparties, a bank or another hedge fund, it could face big losses if one of those counterparties goes under. And now, we're going to be talking about this as well later on. You can see how some of the counterparties are already not doing well because Citadel is such a big play in the financial market. If one of its counterparties is forced to unwind or goes under, that will have a huge ripple effect on other banks, hedge funds, and investors. And so this is to really show, just what is, of course, happening in terms of about why we said the situation now is completely different than it was back 7, 8 months ago, back 2 or 3 years ago. Because right now, these firms, not only have they created so much more synthetics than 2021, they are also extremely over leveraged. they are in a position where they are losing billions of dollars, and that this is what's going to happen. Now, you can also see, with few exceptions, AMC Nvidia has stayed within a narrow interval. I suspect Nvidia is used as collateral for short positions in AMC, and staying within that interval is necessary to stay out of margin calls. And so let's talk about the link between Nvidia and AMC. Now, Nvidia isn't the only stock, but this relates to what we talked about here. One of the biggest focus that we have always said, and everyone knows, is that for the margin call to happen, essentially we want to see the hedge funds who have been suppressing AMC to run out of money. And the moment they do, we are of course going to be seeing AMC and GME squeezing. Now, the reason why I did bring up Nvidia is because of understanding the fact that their focus in terms of how we can indicate, how we can understand how much money is there right now is by looking at the stocks like Nvidia. Now, not only that, we also have the reverse repo. You can see $88 billion. So without a doubt, we're still seeing the reverse repo going down. And like we said, when we see the reverse repo go to zero, it's extremely difficult for these shorts to be continuously suppressing AMC. That's because they have no more liquidity in which, like before, they had access to in order to suppress and manipulate AMC. However, one of the news that we have covered recently is, of course, in terms of how Fed said that they are willing to, of course, inject more liquidity. We are potentially seeing another $2 trillion being injected. Now, that isn't to say that suddenly, because they injected $2 trillion, everything's going to be saved. Remember, that is their last resort. They do not want to do that because of the implications that it will have. And not only that, we have to understand, like we've said in the past, when everything blows up, $2 trillion may not be enough. The reason why they did $2 trillion was because at the very beginning, there weren't as many synthetics for AMC and GME that were out there. And so if they needed $2 trillion to suppress AMC, and that $2 trillion is still trapped, that the value is still there, what makes you think another $2 trillion will save them? And of course, the answer is it won't. And so they will need more. And so the fact that people are saying that $2 trillion can bail them out, I don't think that's going to be the case because the situation is entirely different. You can also see the first basis trade blow up, where we're looking at this particular fund and they lost about 10% this month through Friday, with relative value bets and runway wagers on Japanese assets contributing to the decline. The firm's main fund is down about 8% this year, following a 2.4% decline in the first week of April. They join other traders at hedge fund strategy, struggling amid challenging market conditions. And so what we have to understand is that the market right now, it is not good for any institutions. Some of you may be saying, well, the fund has, the market has gone down, but it also drastically went up. How are they losing? Well, that's because they are on the wrong side almost every single time. So when the market first dropped, they were on long side and they lost money. And when they switched to the short side, the market went up. And so they're in a position right now where no matter what the market does, no matter if it goes down or up, they are losing money. And you can see this evidently with the fact they are down, they've lost about 10% just this month. Now, this is obviously one of the funds that's being mentioned, but the very fact we are seeing these funds to be able to lose over 10% in a month, remembering that their risk management is only supposed to put them out at anywhere between 1 to 3%, but yet they lost 10%. You can obviously understand just how difficult the market is right now, but just how much money these hedge funds are losing. Pair that up with what we talked about with the reverse repo, pair that up with what we talked about with the collateral in other stocks, you can understand exactly what's going on. And now the even more important thing is you can see, shocker, the SEC doesn't want Doge to follow the money because the SEC doesn't want Doge to find out why trade settlement is not enforced. And so what we are seeing is this particular article. SEC pushes back on Doge, asks for access to some agency data. Now, when we first saw news of Doge obviously going and auditing SEC, we talked about why that's obviously very important for us. Because if they are able to see and expose, of course, everything that goes on behind the scenes, then it will bring transparency, it will bring fairness for the retail traders. Because one of the biggest reasons for why retail traders lose money isn't because of the fact they don't have the ability. It's the fact that the shorts, the institutions are actually manipulating it through unfair practices. And so the very fact that Doge wants to audit SEC and they're not allowing them to, obviously showcases what is going on. It showcases the fact that they don't want to expose how Hundreds of firms have manipulated the market, yet they only had to pay a $1 million fine, despite the fact they've made 100 times that, 1,000 times that. And they don't want to talk about how they don't, they allow firms to not settle, which causes billions of synthetics to be created, like AMC, like GME. And so if we are able to see the Doge obviously do more, what we are going to be seeing is more fairness. And so that's something we should keep a close eye to as well. And guys, thanks for watching. I'll catch you guys next time.